on equal terms with the senior team, the senior management team, that tax that income is considered for taxes. However, if you get that benefit in kind in terms of food that is served at the institution on equal terms at your workplace for employees, that one does not attract taxes. Now, other employees, we are now talking about benefits in kind. Other employees tend to be given motor vehicles. Yes. You're given a motor vehicle. Others are given housing allowance. Others are given security and very many other things. All that income is added up together, is aggregated, and at the end of the day, some bit of tax is charged there. Now, what we do, we add all income that is from where tax is supposed to be charged. We add it from the wages, salary, leave pay, benefits in kind, and everything of the other of any other nature that is considered for taxation based in section 19, and that is where charge tax at the end of the month. Yes.
Okay. So are there employees that are not eligible for pay as you earn?
Absolutely. There are employees that are not eligible for pay as you earn, and some of them, one, are the ones that earn below the threshold. You say that the threshold for charging employment income or charging pay as you earn from the employment income is 235,000 shillings. Anyone that earns that amount of money and below is not supposed to be charged tax. So that is the first category of employees that are not supposed to be charged pay as you earn. Then we also have some other employees, for example, members of the security services. For example, in Uganda, we have the Uganda Police. We also have the UPDF, Uganda People's Defense Forces. Those members, whenever their money is paid, they earn it the way it is. However, when you're talking about security, we don't mean hiring a private security guard. A security guard hired on private purposes from a private company is supposed to pay as you earn. This one only is applicable where you provide security for the government, on behalf of the government. Then on top of that, we also have members of the DPP, Office of the Director of Public Prosecutions, or are not also supposed to pay as you earn. And this amendment was made in the last financial year, 2023-2024. So not everyone out there is supposed to pay as you earn. But we say that when you are filing a return, as we shall be discussing it later, you've got to include each and every member at your premises, because it has implications in terms of expenses, when it comes to calculation of the amount of tax that is payable to URI. Absolutely.
All right. So tell us more about the rates, the pay as you earn rates.
Well, pay as you earn is levied basing on two aspects. The first one is for residents of this country, residents of Uganda. And residents of Uganda are supposed to be charged. They have the threshold of 235, as we stated it earlier. Dear viewers, if you can view your screen very clearly, we are going to be discussing this one. We have for residents and for non-residents. For non-residents, there is no threshold. Anything that a non-resident earns is charged PAYE. Even if they earn 10,000 Ugandan shillings, PAYE is charged. Now, if we may go a little bit back to residents, the first band is from 0 shillings to 235,000 shillings. There is no tax that is charged in that category. Members that earn up that amount, there is no tax that is charged. Then, if you earn between 235,000 shillings to 335,000 shillings, you get your income, and you less it by 235,000 shillings, and you multiply that. You multiply the result by 10%. You realize that before you go any further, that the PAYE is one of the forms of progressive taxes, one of the forms of progressive taxation system, because the higher the income is, the more the tax that you're supposed to pay to URA. Now, in the second category, we have 335,000. Anyone that earns between that amount and the 410,000 shillings, we get 10,000. Okay, we get their chargeable income, and we less it by 335,000 shillings, and we multiply it by 20. The result is what we multiply it by 20. What we multiply by 20, and add the 10,000 shillings. That is the second category. You realize that someone that was earning between 435,000 shillings and 335,000 shillings pays lesser amount of money than the person in the second band. Now, anybody that earns between 410,000 shillings and 10 million, you get their chargeable income less 410,000 shillings times 30%. Now, the result we get there is what we add to 25,000 shillings to come up with the amount of money that is paid to URA in terms of taxes to that employee. Now, there is the last band where we have someone that is earning above 10 million. When you earn above 10 million, we calculate your tax. We calculate your tax the same way we did in the third band. Now, what we do is we add your chargeable income less the 10 million, meaning the difference between the amount you earn above 10 million. That the excess of the 10 million is where we apply the 10%. Now, the 30%, there was some bit of misconception that the whole amount of money that was some employees and employers thought when this amendment was made, that when you earn above 10 million, they apply the whole 40% on the whole amount of money that you earn, which is not right. What we do, you calculate for the amount of money you earn between 410 and 10 million, and the excess of the 10 million is where 10% is applied, and there the total is what you earn. Now is what you pay to URA. Now, what do we learn from this before we go to the non-residents? What you learn from this is URA is one of the principles of taxes is fairness, being fair. The lower someone pays tax, the lower someone earns, the lower they should be taxed. That is why in the first band you pay 0 shillings. That is when you earn 435,000 shillings and below. Then the taxes payable increase with your income. And this is what makes one of the principles that makes URA's taxation system fair, because if a percentage was applied across board, it would not be fair to taxpayers out there. Now, we've talked about individuals who are residents, the residents of this country. For residents, that is someone that has been in Uganda for a period of 182 days, or in a given financial year. So that is for the residents. Now, for the non-residents, in the first place we said there is no threshold. That is why you see between 0 shillings to 335,000 shillings, we get the chargeable income. That is the amount that you've earned. Anything below, even if it's 10,000 shillings, you are charged 10%. Now, if you earn between 335,000 shillings to 410 shillings, we bring about the other calculations. We get your chargeable income, and we less it by 335,000 shillings, the total of which we multiply by 20,000 shillings and add 33,500 shillings. So to come up with the amount of tax that is payable to URA. Then in the next band, we have a scenario where someone earns between 410 4,000, just like in the for residents, the same thing applies to non-residents. The only change comes in the calculations, but at least from the bands, the only difference is that there is no threshold whatsoever. Now, from 410 to 10 million, you get chargeable income, and you less 410 from it, the total of which you multiply by 30% and add 48,500. When you earn above 10 million, you get chargeable income, and you less 410,000 shillings, the total of which you multiply by 30%, and when you get that amount, you add 48,500 shillings. Now, just like for the previous bands, for the residents, we also apply 10% in the excess of what you've earned, of what you earn after above 10 million, and we charge 10%. Let me re-emphasize this, that anybody that thinks that anybody that earns above 10 million is charged 40% is not a right narrative, because we only charge 10% on the excess of the 10 million. So briefly, that is how it is. But a key item to note here is that there is no threshold for resident individuals in this country. However, for non-residents, there is no threshold. However, for residents, URA is very merciful to us. The government is very merciful to us. They apply a threshold of 235,000 shillings, below which you are not charged tax, and above which you are charged pay as you earn.
Okay.
Absolutely.
Thank you so much for that, for those rates. Now, what about the return filing and the payment of after you've finished calculating?
Okay, thank you very much. Now, for return, dear taxpayers, dear employers and employees, because what we've got to know is that if you get a taxpayer identification number, remember, in order for you to do anything tax, we begin with registration. If you get your taxpayer identification number, what we commonly refer to as TIN, what we first do is to make sure that the employer is supposed to charge this tax. This pay as you earn is a form of withholding tax.
Yes.
And the employers are withholding agents for the government. You do that role, you do that work on behalf of the government. Anybody that says that my business has failed simply because of taxes, and they ask that person which kind of taxes that have made you fail, and they mention PAYE, that is a very unfortunate situation, because PAYE is not paid by the company. Actually, any investor may apply for a 10-year tax holiday, and within that 10-year tax holiday, you may realize that they have given them a tax holiday on corporation tax, that is income tax, that is charged at a rate of 30%. However, the employees in that company or in that institution are not exempted from paying PAYE. So, you said return filing. After registration, the employer has an obligation of filing returns on a monthly basis. What in the first place, you register, you get a TIN as an employer. Make sure that each and every one of your employees has
TIN as well.
a TIN. Fantastic. Now, after that, you've got to file this, you've got to withhold this tax. When you withhold that tax, you remit it to URA. But now, just like the way that we know how URA's tax system is supposed to be run is in self-assessment system. You assess yourself, you collect that PAYE, and you remit it to URA. When do you remit it to URA? For example, this is the month of July. We consider the month of July to start on the 1st of July and ends on 30th of July.
31st July.
31st of July, sorry. It depends whether the month ends at ends on 30th or 31st or 29th or 28th. It doesn't matter. Whenever it ends, whenever it ends. Now what you do, you collect the payee that is due for government, and you file a payee return that is accessible on the URA website. After getting that return, you're given between 1st of the following month up to 15th of that same month to file in the payee return. Now to the new employer, this is something very important to note. What happens? Some taxpayers think that 15th of the following month for the monthly return filers, the 15th of the following month is the filing date, which is not right. The right thing is you've got to file this return in a period between 1st and the 15th of the following month. You're given that period to prepare your books, to prepare your records, to look for any benefit that the employees were given, to look for anything taxable, and they file you lodge in a return, file it to URA. Now what happens? The total the deadline for filing a return is the same deadline for payments. Something small to remind viewers out there is that 15th of the following month is not the filing date. It's just the deadline, because you're given between the 1st and the 15th of the following month to file that return.
You can actually decide to do it by 10th.
Any day. You can do it on 1st, you can do it on 2nd, you can do it on any day, as long as you don't exceed the 15th day of the following month, unless there is any unavoidable circumstances that barred you from filing that return. But still, you've got to lodge in an application to the commissioner to seek for permission to enable you return this file to file this return a little late. Yes, please.
Okay. So, what happens where an employer fails to withhold pay as you earn?
Now, before I go to what happens to the employer in case they fail to lodge in a return, I need to remind employers here that if you are filing a pay return, you've got to include TINs, what we commonly call as TIN numbers. TINs of each and every employee, whether that employee falls within the threshold or not. Why we include every employee? Because payee is a form of employment income, payment to staff, payment to employees, salaries, and all those things. Allowable expenses in most cases. Now, at the end of the day, there's nowhere where you will show URA that I paid staff like this. In order for you to qualify to get salaries and wages as a form of allowable deduction, URA will ask for the pay return. Okay. Now, if your pay return comes with exclusions by those members who did not meet the threshold, that means you're going to miss out, because the higher the expenses, the lesser you pay for income tax purposes, for corporation tax purposes. So I remind taxpayer viewers out there that don't exclude anybody as long as they are your staff in your premises, in your company. Just include all of them, and at the end of it all, we shall have this expense by way of salaries and wages accepted as an allowable one at the end of the financial year. So what happens if you have failed to file your return to URA? In the first place, this tax doesn't belong to you as a company. It is not you, the company, that is paying this tax. For you, you are acting as a withholding agent. You are only withholding this tax on behalf of URA, and you remit it to URA in specified periods, as we have discussed below. We've discussed a little earlier. Now, if you failed to lodge in, to file a return, to pay, because it is most likely, if you fail to lodge in a return or to file a return, it is very likely that you will also fail to pay. What happens is that that one becomes a direct liability to you. It will become a direct liability to you as the employer. If you're a new employer out there, just know that if you've registered for PAYE as one of your tax heads, and you fail to lodge in a return, to file in a return, and to pay this tax, the resultant tax, the challenge will be that you will be liable to pay that tax, and not only paying that tax, but with interest and the penalties. Because if you fail to lodge in a return and pay tax, it means that URA will come and say, since you failed, you also skipped the deadlines. You are beaten by the deadline, and at the end of it all, you will end up paying interest and penalties.
All right.
Fantastic.
So, what are some of the common pay-as-you-earn return filing mistakes?
Now, there's something that we don't discuss about at the beginning of the show. We differentiate employees and independent contractors. Now, an independent contractor is not supposed to be classified as one of your employees. Why? An independent contractor is taxed separately. Who is an independent contractor? This is a person that you just hire for some special services. And what determines this person is the fact that you can't control them. For example, if you have a service provider that supplies items at your premises, and even though they work within your premises, for example, the third party food service provider may be working within your premises, but that individual is not considered as your worker, is an independent contractor. Now, an independent contractor to you is not supposed to be included in your pay return. Why? If you include that independent contractor in your pay return, you end up distorting the taxability of this individual, because that person, they're usually companies, and you can't tell me that a company is an employee of another company. So what we do for the independent contractor, we tax them separately from the employees. Now, a mistake comes when someone classifies employees with independent contractors, which may end up distorting the pay return. Now, another problem, another common pay return filing mistakes is thinking that if you have filed a return, that is all, which is not right. When you file a return is a statement that shows how much of tax liability that you're supposed to pay to URA. If you fail to withhold the payee, that is one of the common pay filing mistakes. Another problem is not filing this return on time and subsequently paying the resultant tax on time. Why? Because if you don't pay on time, if you don't file this return on time, there is a penalty that you're supposed to pay that is slapped onto you, and subsequently an interest that actually is compounded in subsequent months if it is not paid a little earlier. Now, there are also some employers out there who don't include their temporary staff. They don't include their temporary staff in their pay returns. That is a wrong action, because at the end of the day, you will claim that this employer worked for me. Anybody, even if they have worked for you for 1 month, you include them in your return of that month, and when they have left, it is okay. So what happens to some employers, for them, they don't include short-term staff or temporary staff. And this brings about 2 problems. The first one is that URA cannot get as in the return is not representing, is a misrepresentation of what would have been the right thing. So what happens? Less tax is paid. That's number 1. Number 2, it's a disadvantage to the taxpayer, because, like I said a little earlier, if you are to claim any wages and salaries paid to staff and any other payments, any other benefits in kind paid to staff, in order for you for that expense to be allowed for income tax purposes, you've got to present your pay return. And if some employees of yours are excluded from your pay return, you end up you end up having less amount considered for expense in terms of salaries and wages. So at the end of it all, you pay higher taxes. Now, another mistake that is done is not considering other benefits. Some employers think that salaries and wages is enough to determine how much someone should be charged. However, some employees are given benefits beyond salaries and wages.
Yeah.
So you're providing a car to your employee, you're providing housing allowance to your employee, but when it comes to filing this return, you don't include some of those benefits. That may cause a problem. Now, another one, not including your employees' team in your return. Like I said, if you've recruited anybody, any employer out there, you've recruited someone, after that recruitment, you've got to apply for a team for them. A team individual for individuals. And pay as you earn is one of the tax heads that are registered on that team. So what happens when it's time to lodge in a return, to file a return, you've got to include an employee with their details, including the team, even though that employee is below the tax paying threshold, because you never know. This person may be earning less than 235,000 shillings or 235,000 shillings and below, but later in the year, some more money, salary enhancement may be done onto them, and they earn higher amount of money. And finally, on this matter is failure to keep accurate records.
Yeah.
Anything that's to do with the tax has to be backed up with records. In order for you to claim any benefit, in order for you to claim for any allowable expense, you've got to provide records to URA, and that is only when it will be allowed. Anything that you do outside that is a problem that may lead to misunderstandings between you and the institution, something that we don't need and we actually don't want.
Okay. So we have some questions from the viewers.
Yes, please.
And the first person has sent in the a query as an anonymous attendee.
Anonymous attendee.
They are saying, please talk about the stamp duty registration of employees' contracts, because it is still within the same line of employment income.
Okay, now, as much as I know currently, there is no stamp duty applicable there's stamp duty applicable to
the contract as a document.
To the contract as a document,
yes,
in order for it to be ratified in law.
Yes.
Now, it is usually 15,000 shillings to majority of those documents that are usually exchanged between the parties. And what happens is that the 15,000 is supposed to be paid by the employer. So what happens is that for the employee, if you receive this contract, it may not, just to shed a simple light on this, stamp duty is amount of money paid to document for their ratification. Ratification meaning that this contract will be accepted by law if you present it to court for any misunderstanding that may happen, that may be in between different parties, the employer and the employee. So in most cases, you've got to know that there is an amount of money that is paid, and it is usually 15,000 shillings, like I've said on this document, where we sign contracts between parties to commence activities amongst ourselves, such that we cannot, the employer cannot say, this individual never worked for me, doesn't have any contract with me. And in case you go to court, in case of any misunderstandings, in case of any disputes, that is where it can be applied.
Okay. Then there is Adahi Big Po. I hope I've said it right. He says he or she is West African, and they deeply appreciate this initiative.
Oh, fantastic.
So I think this is we didn't get into the detail of non-resident.
Non-resident. For
I think
non-resident,
this is where it applies.
yes, absolutely. For non-residents, first of all, you've got to know the residence rules in order for you to determine who an individual is, who a person, whether the person is a resident or a non-resident. And we said that for PAYE purposes, someone should have been in Uganda for at least 181 days. So roughly six months.
182 days.
Roughly 6 months within a period of 12 years within the financial, within that financial year.
12 months?
12 months within the financial year, meaning 1 year. At least someone should have been there for 6 months. That's what they meant when they were stating the number of days. So the individual said, is it the same question from Adahi?
Adahi, it wasn't a question. They were appreciating this.
But
I was just mentioning that this is a West African.
Okay.
So the bit about the non-resident applies to them.
Okay. Now for the non-residents, what I can only remind you is that, as you can see from the table, we have different bands. But for you, someone from not a resident of Uganda, you are supposed to pay tax with no threshold, as in any amount of money that you earn, attracts some small tax. But one thing I have to remind you is that this tax is progressive, meaning the higher you earn, the higher your tax, and the lower you earn is the lower your tax. And I think this is one of the best principles of taxation.
Okay, so those who haven't yet sent in questions, please send in some questions, but we shall carry on with the rest. Maybe before we leave the issue of residence, I think it's also important to note that citizenship and residency are two different
things for tax purposes.
For tax purposes. Resident is when you're staying in for our case, it's when you're staying in Uganda. So those are two different things. So we go on to the next question from Jules. If a company has casual laborers, do they have PAYE?
Now, as long as that casual laborer earns more than 235,000 shillings, that casual laborer is supposed to pay PAYE. The employer is supposed to deduct PAYE from that casual laborer. That is one of the mistakes that employers do when they are filing these returns, because when it comes to income tax, you've got to claim for these allowable deductions, and this allowable deduction of salaries and wages cannot be accepted by URA unless you've shown evidence of a return filed with all employees stated in there. The thing with this kind of tax PAYE is that it is a direct tax, and a direct tax is tax charged on income. Unless you've earned the income, you can't be taxed. But if you've earned the income, you can be taxed. So that's where tax comes into play. And there is no exclusion that should be done when it comes to classification of employees that are supposed from whom PAYE is supposed to be charged. Anybody that works for you, unless the independent contractors, as we stated it a little earlier. So what happens here is that even if you have casual laborers, you include them, because at the end of the day, you will need to be given wages and salaries as a form of an allowable deduction for income tax purposes. So include all employees of yours except independent contractors.
Okay. We have another question from another anonymous attendee. Could you please go over the car benefit tax, the computation, and the devaluation every financial year? Also, does a time come when the value is 0?
Now, for the car benefit, thank you very much, the anonymous attendee. For the car benefit, the first part I have to inform you here is that for a car, any employee that is given a car is supposed to be charged tax according to the car, according to that benefit payable. There is a calculation that is that is considered for that purpose in order for us to value the amount of tax that is paid in as far as car is concerned. But I think
we can do it in the
we can do it in the following aspect, because along the way we got to know how much anybody how much is employment income in terms of the non money benefit, the benefits in kind.
Yes.
So benefits in kind, where we have cars, where we have security,
housing.
we have housing allowance, we have where we have domestic workers, etc. Will be another session that will handle, including all those valuation and all that.
Yeah.
Fantastic.
So anonymous attendee, if you can tune in for the next episode, we will cover the practical calculation. Even with the table that was there earlier, we can cover the practical computation because it's a bit detailed, and we would also need to make some illustrations that we are not quite ready for at the moment. So please make it a point to join us next week so that we can have that covered in good detail. And then there's Silu Namutebi, and she's asking you to repeat the stamp duty bit, the bit where the stamp duty for ratification of
the contract.
Yeah.
Now, to shed some simple light on stamp duty. Stamp duty, this is the amount of money, in simple terms, amount of money that is paid in order to render any document legally acceptable. Legally acceptable. For contracts of employees, stamp duty is supposed to be there because it is a document that is supposed to be binding by law. However, in most cases, members, employees, and employers don't take this one as a serious factor when it comes to that contract that is signed between amongst them, because, like I said, when you enter into a contract with someone and you get any legal dispute in court, there's no way you can justify the fact that you were an employee of this individual, or even if it is marriage or any other thing, there's no way you can justify that this marriage is legally binding unless you show us stamp duty that was paid in respect to that document. Now, for the employers, there is stamp duty that is supposed to be paid on employment contracts that are signed between employees and employers, and the normal guidelines apply here. The normal guidelines apply here, and such that in case of any dispute, just like I've said, you can stand firm in court to defend your position.
Okay. So I hope that's sufficient for Namutebi. There's another anonymous attendee asking if it's a requirement by URA for the employer to pay stamp duty for the employee contracts. I think we've answered that.
Well, I think we've gone through that.
So it's basically.
However, before we leave that element, stamp duty is one of the tax heads of the forms of tax that are not considered very much by people. If you realize that there is someone that is in a legal binding marriage with another person, and because they went to URSB to ratify this marriage legally, they forget to pay the 15,000 that is applicable to that is supposed to be paid in order to ratify that marriage. And when disputes arise, we usually find challenges. So employers and employees are urged to put this one into consideration.
Yes. Okay. I think the other thing with stamp duty is that most times it's embedded in other, like when someone pays, let's say, for motor vehicle third party, you pay the fee and not notice that stamp duty has actually been.
There is a huge schedule in the Stamp Duty Act that classifies them. I mean that states in detail how much it's supposed to pay, how much it's supposed to be paid for different aspects and for different documents.
Yeah. Anyway, since it's the start of a financial, some of these questions that you're bringing inform us on what we can bring the next time.
True.
So we're adding to the list.
Absolutely.
The calculation and then stamp duty, and we go on like that. But you can also text us if you want some more details on the different platforms where you're watching us from, so that we can give you more information. But for a detailed discussion, some of these things are better handled in a separate session where we delve into the thing much deeper. So we go to the next question, and that's from Fred Yeager. Of recent, it has been difficult to upload the PAYE file. What could be the problem?
Now, issues to do with internet and network and all those things. What I can tell Fred Yeager is that usually when we do things on time, we find it easy to accomplish them. Why? Because if you're given between 1st and 15th of the following month to file in your pay return, you should do it before 15th or before 14th to avoid these inconveniences. So in most cases, are network challenges, which are usually caused by the huge traffic on the system, where very many people are uploading their pay returns and all that. But my only advice is that when you're dealing with this matter, you've got to do it a little earlier to avoid inconveniences of late rush, of the late running here and up and about. Absolutely.
Okay, but maybe also to Fred Yeager, in case you have, because that might also be a specific challenge to you, you can call the toll-free lines which are running on the screen. That's 0800 117 and then code 000, and then you also have 0800 217 and 3 zeros. So you can call and someone in the contact center will pick up your phone, and you can give them, you can explain to them so that they can take you step by step in case it's something that you're facing as an individual. Then there's Yoram saying, kindly throw light on gratuity or terminal benefits in respect to income tax.
Now, terminal benefits is one of the employment income. It's part of the employment income that is earned by the employer, by the employee from the employer. Now, different institutions have different ways of how they determine their payment. However, this tax is chargeable. This tax is this amount is this income is chargeable, and by 30%. And if you have worked for an institution for more than 10 years, 25% of that income earned is exempt from paying income from that tax. So what you do, if you've worked for more than 10 years, if you've not worked for up to 10 years, you're not charged. You are charged on the whole amount. However, above 10 years, 25% of that amount, of that total, is exempt from paying that from that tax. So that's how terminal benefits work.
Okay.
This amount is charged income tax, and it is it's a lump sum when you're leaving the institution and probably joining another one.
Okay. And then there is someone who's saying that throw more light on the extra tax of 40% applicable. It's still a gray area.
Now, the gray area.
Maybe they can
from the production line. We can. Thank you very much for the residents. In most cases, for the residents specifically, for residents now, if we can if you can see from the band stated there, you realize above 10 million, you get the chargeable income, and you less 410,000 shillings. And that total is multiplied by 30%. After that, you add 25,000 shillings. That is the first step. Just like it is shown in the previous band up there, for persons that earn between 410,000 shillings and 10 million. Now what happens is that above anything above 10 million is where 10% is applicable. Anything above 10 million is where, any amount in the excess of 10 million is where 10% is applicable. And like we said, some members thought that the whole amount is subjected to 40%, which is not right.
Yeah.
The right thing is the first bit is charged at 30% plus the 48,500, and you've got to add 10% of the excess between 10 million and that chargeable income.
Okay. So just roughly, just a random example. If someone earns 20 million.
20 million, yes.
After we've got everything and the chargeable income is 20 million, the first bit is
calculated normally
the first
between 0 shillings, between 1 shilling to 10 million.
Yes.
Is charged as per the illustration as shown there. And the excess of 10 million
is the one that has 10%.
Absolutely.
Okay. All right. So, and actually it's what you add, that little portion is now added to this other bit.
True.
Yeah. So anyway, you see, when we start talking about it and we're not illustrating, it's
it may confuse some.
It sounds confusing. So next week we shall have a very practical calculation for pay as you earn,
including payments. Employment income in the form of benefits.
Yeah,
the
benefits,
to include cars, to include import, to include domestic workers, to include housing allowance,
so
and all things in that line.
Yeah. Then we have there are a couple of questions, and we're grateful for that. That was your we answered. Alice, we've also answered. So Agaba, where can you access the recording for this session? This session will stay on YouTube under URA TV. So you can just check there. That's where almost all the recordings are. All the recordings actually are. Then another anonymous attendee is asking about casual laborers. What if they are paid on a daily basis and not monthly, but the amount ends up being over the threshold at the end of the month?
Now we said, and let me be categorical here, any amount that is earned within a given month that is above the PAYE threshold is subject to tax. So at the end of the day, anybody that earns money above 235,000 shillings is subject to pay as you earn. Thank you very much.
Okay. That's now someone saying schools solicit services of external resource teachers or examiners at a fee. Should these resource fees be subjected to pay as you earn?
Now it depends on how you have classified that external resource that you've the external individual that you've sourced out. Because we said for PAYE, even if someone has worked for you for 1 month, as long as they have earned in a given amount of money in that month, they're supposed to pay tax to URA. However, anybody that comes in as an independent contractor, if this resource person has been sourced from out and they are classified as the person that have come to offer consultancy services, that person is not included in the pay return because he is charged differently from what you're supposed to charge this, your normal employees. However, if they have temporarily joined your staff, they have temporarily joined your payroll in that particular month, you can charge them tax accordingly and as the schedules duly establish it.
Okay. Mark is saying, thanks so much for the insights. I would like to know the recurring penalties or disadvantages one is likely to face if at all they haven't been filing pay ever since the organization started. However, they would love to enroll on the filings and payment.
On the filings and payment. Mark, thank you for listening to us and for viewing us here. Now, what I can give you as an answer to that is that URA has a window of voluntary disclosure. Voluntary disclosure is a window that gives you an opportunity to come clean and show all your dirt to URA. But this dirt is not shown for you to be reprimanded, because we know that mistakes are made by humans. So that voluntary disclosure allows you to come out and state your mistakes that you've been doing in your institution, out of which we can agree to only probably pay the principal tax that is due, and penalties and interest can be waived depending on how you go into you enter into an understanding with the institution, with the Uganda Revenue Authority. So what we do, what I can only encourage you, Mark, is to come forward and we have a discussion where we on how we can start afresh, on how we can have a fresh journey and move forward. So you started your business somewhere in 2021, and since then you've been having workers, however, not remitting pay as you earn to URA. It is an offense, but URA has a window where we can agree amongst ourselves, and we end up beginning a new journey.
Yeah. Fantastic. So maybe the other thing I would like to tell Mchuzi Mark is voluntary disclosure is open if you come clean. If URA is the one that discovers you, it might be a different
scenario.
Altogether. And that other scenario goes for a longer period, I think up to 10 years. Whereas for voluntary disclosure.
And another thing with voluntary disclosure is that if you've been under any investigation, it is not allowed there. We don't allow you to come through, because if you are
found out.
If you're under investigation anyway, we need to first do those investigations and we complete them before we can agree on other issues altogether. But still, even if you're under investigations, we have what we call ADR, alternative dispute resolution, where we agree on issues outside the court, just in case things have been escalated to court level, where we agree and we proceed.
Yeah. Absolutely. So anyway, basically, there's an opportunity for you to come and we understand each other and we agree and we see how to make sure that you have a clean slate and you can move forward. I was going to use some Christian terms. You come, you confess your sins,
and God forgives you.
Forgive you, and we see how to move on.
Absolutely.
In a new life, with a new self. So there's that opportunity as well. So thank you, the next person, anonymous attendee. Thank you very much for this insightful refresher seminar. How do I classify that an individual is liable for PAYE or withholding tax?
Well, we said that PAYE is a form of withholding tax, Mr. or Madam anonymous attendee. How you determine is, first of all, when that person has been hired by the institution. You hire, you give them a contract, a working contract. You apply it. You make sure that they have a team they have their individual team, and at the end of the day, they earn a monthly salary. They earn a salary. Now, after earning a salary, that's where you can determine if someone earns less than 235 or 235,000 and below. That person is not liable to pay PAYE. However, anybody that earns above that amount, they have determined, because the only determination of any tax payable in a form of income tax is through ascertainment of income. You go to ascertain that someone earns income. That is number one. Number two, he or she talked about withholding tax.
Is that withholding tax?
Now, withholding tax, as for employees, is PAYE in any way. However, if it's an independent contractor, they supply goods to you, or services above 10 million, that is where 6% comes into play. The withholding tax, that's when it comes into play. And at the end of the year, that tax is carried forward as a credit that is deductible from the total tax from the total tax payable to URA.
Okay. So there's a question here: which one comes first, payment or returns? We normally want to pay payee in the month we have deducted, but returns can only be allowed after the month ends. So how are we helped in that situation?
Thank you very much. One step at a time. There's no need to rush. What we do for tax purposes, unless you have filed in a return is a statement of how much tax is payable, of how much tax is supposed to be paid by taxpayer. You cannot pay unless you file the return, because what are you paying? Because the return is supposed to show the total amount of tax payable at the end of the period, of the tax period. Now, the first thing to do is to file in a return, and after that, you pay the return tax as it is stated in the return that you filed. This very big mistake is also common amongst taxpayers in other forms of taxes. Someone just says, how much tax am I supposed to pay? This amount. They just go and they pay to you without filing a return. Remember, if you pay without filing a return, yes, there is no interest that is supposed to charge onto you. However, a penalty is charged because a return is a statutory obligation, is an obligation by law for anybody that pays, that's supposed to pay tax. You have to first file a return. If you don't file a return, you face the challenge of endless penalties that may be of an inconvenience to you.
Okay, maybe what I want to ask you, in line with what the anonymous attendee is asking, payment, when it's not like the PRN comes from the return, and some people maybe the salaries they pay are the same month on month. I'm asking, the salaries or the payments they make to their employees might be the same every month. So if every month we pay the same amount, which is the same amount paid this side of salary, same amount paid in pay as you earn, I think what this person is saying is, what if I just want to pay? Then I can file
in advance. No, it's not.
Because the PRN is separate from the return.
It should not be like that, because in as much as you may state it that you pay the same amount of money in month out, it may not be true, because usually employers tend to have new members on board. Now, how can you account for the new members on board if you just keep on paying? Now, if you pay, for example, you are in advance for 5 months, if I may state it like that, and within the course of those months, you enroll new staff who are supposed to also pay PAYE. What do? You're supposed to account for each month separately, and you don't account within the month. You account after the end of the month, whether the month ends on 29th, 28th, 29th, 30th, or 31st. The accountability period for PAYE, for PAYE return, is between the 1st and the 15th
of the next one.
Of the next financial, of the next period.
Okay, so what I can say maybe to anonymous attendee is that it's like a system. There's a system. So if you want, you can file yours and pay on 1st after the month has ended. So we still have a couple of questions. Let's maybe rush through it. Why is it that when I have money on my team and when I feel the payee, it doesn't cancel, but instead it generates interest?
Pardon that?
Why is it that when I have money on my team and when
credit.
I file, the payee, it doesn't cancel, but it instead generates interest? So I think we need to determine if it's a credit or if it's money.
Because now any amount of money that is paid in excess could be a credit that is deductible in the following period. And in the pay return, they have that provision. That is there any credit that is that is accrued that is due for you, due to you, and that money, if you state in the credit, the tax is reduced automatically, and at the end of the day, we end up very fantastic at that. So, and filing during the return filing period, the return filing cycle, you only file a return to pay. And I wonder how an interest is paid for submitting any return or something like that.
if it generates interest, that means the amount that's reflecting is what is owed. Not...
And there's something that we need to note here. That interest is as a result of late payment. And the penalty is as a result of late filing. So what happens? I have probably failed to connect dots between filing a return and the interest that is slapped onto this tax.
I think what I can tell this Berok and Sylvia is that we need to know the amount that you're seeing. Is it a negative? Is it a positive amount?
On the ledger.
On the ledger. So that we can advise accordingly. But if it's generating interest, that means it's something that wasn't paid in the past that's still
probably
generating interest. But there's good news this financial year. If you can come and pay the principal before the 31st of December, penalties and interest can be waived. And then we have Chebet, Ruth. Thank you so much for this session. My question is about part-time workers, for example, radiologists or anesthetic, who do they pay? Yeah, the specialists. Are they supposed to be paying PAYE?
Well, part-time workers depends. It depends on whether these are employees of the institution or they are independent contractors like consultants. If they are the employees of the institution, then why not? Because if you're paying, you're supposed to pay according to a payroll schedule that you've shown in the income tax, in the PAYE return. And at the end of it all, anybody that earns within that PAYE return, anybody on the payroll ends up liable to pay tax that is payable by any other person.
Okay. So someone is saying they would like to, I guess they meant digress a bit on the question in income tax and saying, do schools pay income tax?
Schools pay income tax. Schools pay income tax. Though we are discussing pay as you earn. Schools pay income tax. Schools are supposed to pay, and there is a mistake usually done by some members of ours of considering schools to be paying presumptive tax. Schools are providing a professional service, and subsequently are supposed to pay income tax because they earn income, they have income, they have expenses. If they can get a good accountant to balance those books, they should be able to pay income tax and file returns provided for the income tax head.
Okay. So for schools, that now would be the income tax, but for like corporation, right?
Yeah, for corporation tax.
That's corporation tax. Because now that's as an entity.
Absolutely.
Then we already settled that the teachers would now be paying pay as you earn as employees, the teachers, the headmasters, the support staff, and all that. So I hope that offers you clarity. Someone is saying, talk about primary and secondary employee, the tax rates.
Primary and secondary
employee and the tax rates.
Now, primary and secondary employee, an employee that is
I think it's employment. The people have like two jobs.
Oh, for the two.
I work at TRA,
work done.
Then
okay, now
so
fantastic.
those are like two salaries.
Now, for the two salaries, you've got to determine whether you are a permanent employee somewhere or you're a part-timer. Now, for the primary employee, for your primary employee, that's the employee that has considered you in their pay schedule. For the normal rates of those bands between this amount and that amount. So, dear viewer, the one that has asked this question, it's very important. We didn't talk about it. When you are an employee in one with one employer, and they have included you in their pay schedule, you end up paying PAYE the normal way of how we have seen it, we have calculated it, how the bands have been seen up there on the screen. However, if you have if you're part-timer somewhere where you do secondary employment, it is a flat rate of 30%. We charge 30% from secondary employment or from employment where you are considered as a part-timer. part-timer. But for where you're considered as primary, as in a full-time employee, you end up paying as per the bands and schedules as were discussed on the screen there.
Okay.
Fantastic.
So Scovia is saying, how do you claim for money remitted to URA by mistake if a staff has already left us in terms of pay as you earn?
If
the staff, how do you claim for money remitted to URA by mistake if a staff has already left? That's in terms of pay as you earn.
You apply for a refund.
Okay.
You apply for a refund and the URA can give it to you. But after whenever what you need to note there is that whenever you apply for a refund, you have invited an automatic audit in your tax affairs. Now, if the case is with the employee is with the pay return, there we can talk about how we can audit your pay schedules. Absolutely, yeah. But you can apply for a refund.
Okay, and then Scovia is also asking, how do you work on a staff whose payee was not remitted the previous month?
It is carried forward.
You amend.
You can make an amendment. However, there is a challenge. There is a challenge with that. An amendment can be done, but within a period specified. That is why, when it comes to filing a return, we encourage employers to file return between first and probably the maximum should be 10, such that anything that can be any mistake that can be spotted there can be done and can be worked on between 11th and 15th. Okay. Before the filing and payment deadline.
All right.
You can amend that return, that pay return.
Okay. Then are online tax calculators for Uganda accurate? Well,
online tax calculators for Uganda, we have for the pay calculator. Yeah. I have come across it. We also have Motoka, that one that calculates taxes for cars. This can be considered, especially the pay calculator, can be considered nearly accurate. However, there's a disclaimer on that. For tax purposes, your pay return automatically calculates your taxes. Your pay return, when you're filing your return, the taxes are automatically calculated there. When you enter in those schedules, you enter your employee's TIN, and the subsequent employment income, taxes will automatically be calculated. So I encourage anyone out there to rely on URA systems to calculate taxes, and not on third parties, because in any way, in order for you to pay, you first file that return and the payment comes in next.
Okay, so maybe what you can say, Dr. Doreen, as an indication for your personal use, you could use those apps, but since they're not issued by URA, we can't confirm, or we can't really confirm if they're okay or not. But indicatively, maybe you can use it for your own purposes. Someone, Ikamkama is thanking us for the presentation. Someone is asking, what happens to someone who earns daily? In addition to that, Alice is asking, we have scenarios where you consolidate one's income for tax filing, they exceed certain brackets. How do you account for the extra, yet the deductions were already made?
I've not got it. I've not got it.
We have scenarios where you consolidate one's income for tax filing. They exceed certain brackets. How do you account for the extra, yet the deductions were already made?
Yet the deductions were already made. Now, for the extra, you see, there is not every amount payable to an employee is taxable. So in any case, some of the wage earners are not taxed subsequently, because this is an individual that receives money on a daily basis or on quite a daily basis, and usually that kind of money is less than the threshold amount.
Okay, the questions are so many.
Fantastic.
We might not finish everything.
Finish everything.
What I think we can do is, since the next episode we're handling tax, the practical employee calculation, employment income calculation, pay as you earn. We'll include the pay as you earn, so you can see how the thresholds work out, and then the benefits. Then even the person asked about terminal benefits or the lump sum payments, we'll try and see that everything can be included. Some of these questions you're asking would be even better clarified when you see the practical calculation. Yeah, because we've really overshot on time. But maybe you can give us some parting shots and a close properly.
Thank you very much. Thank you very much, viewers. Your presence in this has been shown by the very many questions that you've sent in. We appreciate that. There is a specific area that we have not handled, and I think the reason is because we need, in most cases, when it comes to calculation, you've got to have a practical aspect of it, probably something projected on the screen, and you can internalize whatever is explained as you are seeing it. So we promise that next time, if God gives us life, we will come with the illustrations of how benefits in kind are taxed, and also iron out some issues. There is an issue of stamp duty on employment contracts. We shall come with the more clarification on it, because I have not seen this one as a very common as a common act, because usually employees are given their employment letters and I just go with them without paying stamp duty. So in most cases, sometimes we don't have information pertaining some of these aspects. But we believe that our session has been a learning platform, and we pray that God gives us life and wisdom to internalize what we have learned and probably proceed with our obligation of paying taxes for the development of Uganda.
Right. Thank you so much. Thank you so much for viewing, for taking the time to view and learn. The questions are indicative of how much you're yearning for more information, and we are eager to offer that. But unfortunately, there are time frames within which we can have these sessions. So we shall schedule. All the questions will inform our subsequent programs so that we can have more detailed discussions for some of the things. The different platforms we are on are running through the screen. We have toll-free lines. Please make use of those and call. We have a WhatsApp line. We have Facebook, TikTok, LinkedIn, X, and YouTube. But if your issue is really urgent, some of the questions you may ask, and it's really urgent and we don't want it to affect how you're working, you can make a call or send it on WhatsApp, or you could also go to Chrome in your browser, or preferably Google Chrome, and type URA Touchpoint. It will also give you a platform through which you can create a temporary account and then ask these questions and even attach evidence and things that can help the teams to support you. Thank you so much, and see you next week.